Hey traders, welcome to the first US equity market breakdown for 2021. And as I said in the FX breakdown, I'm coming into the year feeling pretty bearish looking at these charts. So I'm going to run through a fair amount of charts, but I hope to show you that what we're seeing is quite a bearish picture and something to definitely start looking at in terms of getting defensive with your portfolios and preparing for a fairly strong drawdown in the next coming weeks or months. So let's get into it. As you can see, we're starting with the S&P futures. And if we look at the structure, you can see how the big corrective move from back in February was all part of a nice big expanding triangle beginning in January 2018. And if that is the case, then what we're looking at is an approach of the full target of the S&P. And I've been saying for a while now that my full target for the S&P is around about 4,000. And that's going to be a big level to watch. And if you see, if we go into a lower degree structure and we put that piece together, you can see how we're starting to converge at this 4,000 level. And again, if we go into another lower degree structure, which is the one that just formed, going into, say, the 4-hour, you will see that once again, the numbers converge at this 4,000 level once again. So a lot of these Fibonacci extensions are pointing to exactly this 4,000 level as the high. And as you'll see in some of these other pairs, that is just the beginning of the bearish picture that I'm seeing at the moment. Starting with the Dow Jones, you can see how, if we go all the way back to, I think it's the weekly, you can see that what we're looking at is a similar scenario where the preceding impulse starts at around about this level here. And when we go and see where the highs are, we are looking at a extension of 33,500. When we go a little bit further zoomed in to, say, the daily, and we go to the recent structure, you will see again, we're looking at around about this 33,500 level as a convergence zone. And again, going into the most recent structure, the lower degree structure, you go in and you find that pretty much spot on with the 33,500 level is the full extension. So again, we're approaching this area, which seems to be the area for the turn. The Russell is another one. Just going to show you daily where we're looking at the Russell that has got quite a strong run of late. But when you take a closer look at the structure, you see that we are very close to the top of that structure. Facebook, and this is one of the more compelling charts. Facebook very much in line with a big running flat corrective structure, which is lining up for a potential 44% decline from the highs. And I think we may have seen the highs already looking at what price action is doing. You can see how this is forming quite a clear ABC corrective structure with a C wave still to come. And initially I was looking at this as the complete structure, but when you take a look at it in isolation, it seems a little bit small. And when you take a closer look at the price action, you can see how this middle section is much cleaner as an expanding triangle rather than this as a C wave, and gives you much better alternation. And we have this big pullback, ABC, nice choppy corrective price action to the high, and we are starting a big choppy move back down, probably towards around about 180 would be my full target for that move. So a big multi-week decline on the cards for Facebook, especially with the big privacy issues that they're having at the moment. A lot of pushback from their new privacy policies. If we take a look at the highs, it is starting to look a lot like what we're seeing is this is your first impulse from the high, and what we're seeing now is the first corrective structure where this would be your A wave. We're getting a pretty decent choppy B wave to the downside. I suspect we'll get a pretty sharp push higher up towards kind of 270, 280, and that is more than likely going to be the top And as you can see, it's forming, I wouldn't call it a very clean head and shoulders, but very much along the lines of a classic charting corrective structure, which will lend to a big move to the downside. Apple, another one of those. If we take a closer look at the corrective structure, big pullback from back in August. Not as big as Facebook, as I see this is only around about 24%, but I get the feeling that this is going to turn into more of an expanding flat pattern where the C wave is going to extend further down, probably down towards the lower to mid 80s as a full target. So again, very clean corrective price action, very clean price structure, which is signaling a big turn to the downside. And if we zoom in, you can see it's a very similar scenario where it looks to me very much on the lower time frames. What we've seen is the first move down, and looks like what we're forming here potentially is a little bit of an expanding triangle, something along those lines. Very unclear, very choppy price action, but very corrective for some more downside to come. Amazon, not much in the way of corrective structure, but if you look at it, pretty much the same scenario. We can look at that as the first impulse down. This is your A wave up. You have an impulse down, choppy corrective price action, more than likely another impulse down for your B wave. Then we'll push for another push higher, a lot like Facebook, where you'll just get another little push up to complete this as a structure. And then from there, we'll get another leg lower. And again, we started to see what looks like quite an aggressive topping pattern. And when you zoom out, say to the monthlies, you can see exactly why we are very much overdue a very deep corrective structure or very big corrective wave. It's hard to pinpoint that as a corrective structure in itself, meaning that we could get another descent very similar to February, which we're looking at is 36% on Amazon, but it does have a similar structure to Facebook where you have this middle expanding triangle, which does kind of fit the bill. And if that is the case, this little running flat will definitely give you quite a decent downside, probably targeting around about the 2,300 level as a low. So another fairly big decline. Microsoft, similar scenario where we look into the lower time frames. You see this pretty much classic topping pattern, and more than likely part of that is this as your A wave, meaning we should see a move quite similar to this from the highs down towards probably kind of a 160, 170 full target, giving you a nice big running flat. Netflix, same scenario. Google, very similar scenario. As you can see, topping pattern, very much along the lines of a head and shoulders, even clearer head and shoulders on Google, very clean corrective price action that resembles a topping pattern, which is set to follow tech lower down. And if we had to re-look at what we see in the structure, it's potential that we can look at this as your A wave, very similar to the Amazon story, where all of that is potentially your corrective structure. But I'm not going to get into too much detail on Google. I'm just showing you how a lot of these tech stocks are very similarly looking in terms of a deeper pullback to come over the next few weeks and months. When you look at something like advanced micro devices, you just have to go all the way out to the monthlies to see just how far this thing has run. And when you go all the way out to the monthlies, you see a very clean impulse correction, impulse structure, and we've gone beyond our full target, our maximum target that we call. So again, very much looks to me like this is an overextended stock. And if we start to look for topping patterns, and we start to connect the dots with some of the other tech stocks, what you're seeing is potentially, again, a kind of a classic charting pattern, head and shoulders. Initially, we were looking at this as a running flat corrective structure where we should just get a pullback towards 72 and then a continuation to the upside. Obviously, that's still a possibility. And if that is the case, so be it. But regardless, you want to be short advanced micro devices at some point as you see this decline coming down, because there's the potential that this decline is just the start of a much bigger move to the downside following the rest of the market lower. Boeing's a tricky one to look at because of the structure that we see. But I'm inclined to look at this as a bit of a zigzag correction where you have an impulse up. This is definitely the choppiest section of this current structure. So you have an impulse up, you go through to this big choppy section, and what you're seeing is a push up towards the middle or lower target of that range, and you're starting to see quite a big pullback from that range, topping out at this kind of 240, 230 region. What that means is that's a complete ABC corrective structure in theory, technically speaking. And if we continue to see downside on this, there's a good chance what we're going to see is Boeing going back to its lows at 80. So it's not the clearest picture ever, it's not the best price action, but as you can see from that high, we've had a fairly impulsive move. So unless we start to see something more corrective back up to the highs, we're really going to have to start looking at a pretty bearish picture for Boeing. Alibaba, so a very similar scenario. We were speaking about a very deep pullback from around about this 300 region down towards 200 full target, and that's exactly what we had. The difference with that is if we start to look at Alibaba and this being more of a contracting flat, it's a possibility. It's more unlikely, but it is a possibility that we have to take note of, that potentially this was a contracting flat and this is potentially the start of a bigger move. If not, there's a good chance that what we're seeing is exactly what we're seeing, but Alibaba turns into a little bit more of an expanding corrective structure, getting even lower than it has from the highs at 320. Going into something like Bank of America, you'll see exactly what I'm talking about, because when we zoom all the way out, we have a very clean corrective structure that we're looking at. You have a very, very big A wave from back in 08, 09. And what we've seen over the preceding years is just the middle B wave of that corrective structure, meaning what's to come at some point moving forward is another decline equal to that of the 08 financial crisis. It's a little bit early for that, it seems, but all we really need to do is break these highs at 36. So we are much closer to that turn than we are from a distance to that, or a long time to go until that turn comes. And if you go into, say, the lower structures, the more lower degree structures, you'll see we have a very clean corrective structure in this section, which means on the lower degree structure, we are very much approaching those highs, which is again in line with the highs that we need to break before we see that big turn. So obviously, I may have my timing wrong on this, and we start to see Bank of America still pretty much rally all the way up to these highs at 56 over the next few months before we see that turn. But we are very much very close to those levels. As you can see, if we go into, and we're using log charts here because log charts are more effective on the longer time frames, you'll see that that one-to-one target, even though it looks a little bit skewed, is sitting exactly at those highs. So I believe we are much closer to that big decline than most people believe. Berkshire Hathaway, another big one. If we zoom in to that big February decline, and we see the price action that's followed that big February decline, we are in line for a Berkshire Hathaway collapse, basically a 31% collapse in its share price, kind of in line with some of these other pairs that we're seeing. And we are again sitting very much at those highs, looking a lot like a bit of a double top is occurring. So if we start to see some downside momentum from this region, we'll have to keep a very close eye on what's to follow, because what's lining up to me, it looks exactly like a very big fall. Beyond Meat's one of the shares that actually looks fairly decent in terms of a bullish picture. So if you want to hedge your short bets, I think Beyond Meat is a pretty good opportunity that's on the table. As you can see, just taking away the drawings, we see a very clean corrective structure. Nice big impulse up from the lows. We go into a fairly decent A wave, nice structure to it. Nice long choppy B wave, impulse up. We go into what looks like an expanding flat or potentially an expanding triangle, depending how you want to look at it. And to follow should be, like we said, another big push up to these highs at 250. So the structure is really nice in terms of what we're looking for a decent entry. And what we saw over the close yesterday was quite a nice push off the lows the last two sessions. So there's a potential for a nice move. I still have this big gap open here at this 100 to 110 region, which is still a concern for me, but I still like it in the longer term. So a nice hedge for what the rest of the market is showing. Citigroup, again, just going all the way out to the monthlies. You can see we have a big impulse down and a long drawn out corrective structure. Impulse up, A, B, C corrective structure. And what we're looking for is another move very similar to Bank of America. And when you take out the log chart scenario, you can see how the highs of this chart are, again, really interesting levels to be looking at. And again, you're getting this head and shoulders, or this, in this case would be a continuation head and shoulders structure. And what's to come is another big move to the downside. Camco, and as you know, if you are a member of the Academy, we have been fairly bullish Camco and have seen some really nice returns. But upon reflection of this market, it seems to me that we may have been premature in thinking that this is going to get much higher than it is already. If we take a look at the structure as it is, or as we've denounced it, it does look like we could get up to this 26 to 39 region. But if there's a different scenario where I've potentially misread this market, and I'm taking that into account given what the rest of the market is doing, potentially what we're looking at is all of this as your first of the B waves, your A of B. We go into a big expanding triangle or expanding flat, depending how you look at it. And then what's to come is a continuation of this move to the downside back towards the lows. So again, it's not a hugely conclusive or very clean picture, but it is a possibility that ties in fairly well with a move down to the lows and a negative move in the share price. Chipotle, taking a bit of a zoom, we see we have a big dip back in March that has no correlation to any other move that I can see. Would have to look at all of this as one big correction, but that means the B wave went from 36 to 770, 800, which doesn't make sense to me. So in that case, what we have here is a wave that is in isolation. And if that is the case, although it is a very impulsive looking B wave, we are approaching the high with a very interesting looking ascending wedge. So potentially a big dip in Chipotle on its way if we can see a break of this, so not descending wedge, ascending wedge. So again, pretty bearish looking price structures that we're seeing across the board. DraftKings, I'm still fairly bullish DraftKings, although upon completion of this move back up to the highs at 64, that could very easily turn around to the downside. That's all we really need. If we look at the structure, impulse ABC, and you see the next wave up, the complete structure is at 70, and your medium target is around about those highs at 62. So again, as bullish as it looks, it doesn't have much legs left before we see some other corrective price action. And if it's going to follow the rest of the market, it should be a fairly decent dip. So we'll take another look. Yeah. Disney, another very conclusive picture to me. Like you say, if we go all the way out to the dailies and you see the big move down from December all the way down to March, it seems a lot like that looks like a very clean A wave with a very clean corrective structure in terms of a B wave back up to the highs. If that is the case, and that is what it looks like to me, we should see a fairly big drop down towards that 100 Rand or $100 level. And again, sitting at 176, that is a very big drop and very conclusive of what we would consider to be a market crash. EA Sports, another one, zoomed out, you can see what we're looking at is a very clean corrective structure that is ready to fall back down. More than likely, we're going to go break these highs first, so might have some time with EA Sports, but there's no guarantee of that. And what I do feel is guaranteed is one more big fall to come. And that big fall is taking EA Sports roundabout back to the lows at 73, 74. So again, around about that 40 to 50% drop. Ford, take a nice look at Ford, all the way zoomed out. And what you see is not the cleanest corrective structure ever, I must admit. But as you can see, if we take this as the first move off the highs and we go into an immediate running flat, this wave is looking for a wave that matches it. And a wave that matches it seems to be the wave that just occurred. And if that is the case, approaching a fairly well-established trend line, it's possible we are seeing the highs of Ford, and we could see a decline in Ford's share price again to the likes of around about down to the lows is 60%. But it looks like we're going to go even lower than that by the structure if this does play out the way I think it is. So again, very bearish price action. And even again, if you go into the lower time frames and look at the structures, you see this as probably a triangle. I'll look at this more as a triangle than a contracting flat. But you can see just how close we are to the highs of that structure. Again, as we approach that trend line, so lots of convergence in this area, which is of a big concern. FedEx, again, just in terms of where we are in the bigger picture, you can see how FedEx is very much near the highs of a structure, sitting and bouncing off that 1.168 extension, and quite a strong pullback from then on the weekly. Very big pullback, in fact. So potentially what you're going to start to see here is a little bit of a rally in price, give you a nice little head and shoulders, and the signs of the first correction. More than likely, you'll get a bit of a rally here, give you your right shoulder. You'll get a nice chop back down to the lows. Something along that line, nice little running flat, and then another leg up as a kind of retest of the neckline. And to me, that would be the perfect short, because what's to come should be a very, very big drop. FireEye, another one, zoomed out. You can see what we're looking at is a fairly clean A wave, very clean structure within the A wave. What we like to see, fairly clean B wave, nice structure within the B wave, and a bit of an expanding flat, but a corrective structure nonetheless that looks to me like it's topped out and is potentially going to be turning here. And when we look at the numbers, we can see once again sitting right on that 1.618 and seeing resistance at that level. So we'll be keeping a close eye on FireEye, especially looking like it's forming a little bit of a classic topping pattern. Another one that's interesting, and if you go take a look at FX, you can see why we are bearish gold, but you can see again, impulse, correction, impulse, very clean corrective structure, and we're sitting right at the top of that structure. Maybe a little bit more upside to come, potentially, but regardless of that, you can see how close we are to that high. And when you go into the lower time frames, what you have is a fairly clean and clear head and shoulders pattern. So again, very bearish looking picture in my view. IBB, another one, zoomed all the way out. You can just see where we're sitting in terms of a big corrective structure, impulse down, very clean corrective impulse to the upside. Sorry, corrective structure to the upside with a big dip to come. From about 158, we can expect another 40% realm decline. So we're starting to look again for highs in this market. When we zoom into the lower time frame, we look for an end of the structure. We can see we're sitting right on the minimums, potentially a little bit more upside, but we're right at those levels where we could start to see a turn. IBM, another one, zoomed out, you can see exactly what we're looking at. Big impulse off the highs. This would be your first initial impulse. Big push up, very choppy price action. I'll go into the weekly to make it more clear. Impulse, nice, very clean B wave. We like this complexity in a B wave, and we're getting a nice push up with alternation, which means this is your A wave. We are now in the C wave. So approaching this kind of 157 region is going to be a telltale sign for a turnaround. That being said, we are already at the minimums. So again, at that level where we could start to see a turn in these stocks, and yeah, something to be very, very cautious of in terms of a turnaround. And if we take a look at the lower degree structure, again, we're sitting very close to those minimums. So this could get a little bit of a pop higher, but cause for concern nonetheless. Intel, again, just very, very topping looking pattern here. Very big head and shoulders corrective structure. You can see how this is starting to look a lot like a topping pattern. And now when we zoom out and we take a look at where we're sitting on the higher time frame, you can see that again, what we're looking at, especially in these old tech companies, is cause for concern, because what we're looking at is potential decline, similar to that of the 2000 market crash, meaning 84% decline potentially. So yeah, again, cause for concern, very bearish picture. Johnson & Johnson. Johnson & Johnson doesn't look too bad on the lower time frames. Maybe it's a little bit more upside to come. As you can see, very clean impulse up, nice clean corrective structure, and we traded this to the upside. We remain long, but very cautious, because when you look at where we are in this lower degree structure, we're sitting right on those minimums. So I believe we're going to get a little bit more upside, which gives me a little bit of hope that we are going to take our time. It's not going to be a big crash in terms of one big sell-off event, but what I believe is starting to occur, where we're going to start to see, is a decline in economic conditions, or something that's going to over time reveal itself to be a big deal, rather than a flash event like a coronavirus or something along those lines. So again, sitting fairly close to those minimums still, and we could start to see a turn. JP Morgan, another one, zoomed all the way out, big dump in that February, March region. Then we have a very nice clean corrective price action back up to the highs, and sitting at those highs is a very much a cause for concern, because what's expected to come following that is another big dip down towards 76, 50% approximate decline. Lockheed Martin, we've been bullish Lockheed Martin for a while in terms of the bigger structure, but we're actually starting to change our view on that. When we take a look at the higher time frames, you can see just how much we've moved, where we are in the bigger picture, which means we need to start to look for a decent pullback. We were looking at this as an impulse down, and this as one big corrective structure, which is still a potential, but it's possible that what we saw here was an impulse up, which became a wave failure, and now we're starting to turn to the downside. If we go into the lower time frames, you can see what I mean, where this was your wave failure, this is your first impulse to the downside, and what we're seeing here is the first corrective structure, very much along the same lines as Facebook, where we had a little bit of a decline, and what we're seeing now is a B wave to the downside. You may get a little bit of a rally, and that's going to give you a signal that that's a C wave, and then another further price action should see that decline potentially back down to the lows. Live Nation, again, zoomed out to the daily, you can see impulse down, nice clean corrective price action to the highs, approaching those highs once again, and very much lined up for a decline very similar although more longer lasting than the one in February, March. So 70% decline in February, March. MasterCard, another one, big drop, February, March. The price action on this one isn't as clean as I would like it to be. This little structure in the middle isn't great. But again, once the price action clears itself up, it will reveal that what we are going to see next is a big drop from around about this 340 region, potentially go break the highs first to 370, down towards 230, 235, somewhere around there. We'll have to see how this plays out. Visa has a much clearer picture as to what to expect there. Looking at 3M, if we zoom out, we can see that what we're looking at seems to be more of a corrective structure of this as your first impulse, which means this is potentially just an A wave, and what we're going to see in 3M, although it's an industrial and should survive the fallout much better, it still looks like it wants to decline. Not the cleanest picture ever, but again, something to keep an eye on. If we zoom in, we are starting to see a little bit of downside. Potentially, this is just a running flat, which I've been looking at it as such for a while now. We were looking for a pullback. If you've seen some of the other webinars, or if you're students, you'll know I've been looking for this pullback in 3M down towards this region. We're getting that pullback, but there's a potential that this just continues to the downside. That's we need to be sure of. So kind of ruins any chance for a long. But if you want to hedge, this is one of those ones that will give you a little bit of a hedge along with Beyond Meat, giving you a little bit of a long opportunity because of the structure that we have playing out. Morgan Stanley, again, take a look at the lower structure, impulse, very clean corrective price action, a great trade that we took part in and got some really good returns. But we're at the end of that structure now. When we zoom out to the monthly, you can see exactly what we're looking at. Again, very big impulse to the downside, your kind of financial crisis A wave, very long choppy move up, back up to the highs. So changing the structure, you can see how zooming out has helped bring some clarity. And again, we're approaching these highs, lining up for a big drop from around about the 90 region all the way down to 6. So this is very, very big. And you can see that potentially what we're looking at is something along the lines of a financial crisis, because it's these financial stocks that look like they're going to get hit the hardest. MicroStrategy is an interesting one because of the Bitcoin narrative. And as much as I appreciate Michael Saylor and his kind of boldness, I do believe he's going to be in for some pain, at least in the short term. I think at the end of the day, in 5 years' time, he will be vindicated, but he's going to be going through some big pain in order to get there, because what we see is a very clean, what looks to me like a B wave structure. And we're sitting right at the highs of that structure. And if we start to see Bitcoin fade, which I said before in the FX market, I believe we're going to see a little bit of a fade in Bitcoin. We're going to see MicroStrategy take quite a big knock. It might be early on that call, but mark my words, you're going to see a big drop in something like MicroStrategy and Bitcoin. NVIDIA, again, these older tech stocks just lining up for a fair amount of pain. Nice big impulse to the downside, very clean corrective structure. Although the B wave ran a lot, I do believe we're sitting right about the highs of the moves, and we should see quite a big drop to come moving forward. And when you zoom into the lower time frames, you can start to see this as a little bit of a topping pattern at the highs, something to very much be cautious about. Pfizer, another one. We zoom all the way out. You can see Pfizer's issues began in 2000, all the way into the financial crisis, but a slow chop back up to the highs. Still potentially a little bit more upside to come. But that being said, you can see that what next is another decline of similar magnitude. So the bigger monthly structures are much more reliable than the lower time frame structures. And when we take a look at the preceding price action, you can really get a good idea and students will know what I'm talking about as to where we're lying in the structure and why we expect such a big move to the downside to come. So take heed, be cautious. The thing with Pfizer is that it does look to me like the structure has a bit more upside to come. So there may be a little bit of time to come before we see the highs. But again, we're sitting right at those medium price targets. And even just a little push is taking you up to the highs. A big caution for me with this one is when we take a look at the lower time frames, we've touched on that medium line or that median line, and we've seen quite a big drop from there. So if we're looking at this as a contracting flat, we have seen a potential top of this and we started to see downside. Only price action will confirm that, but it's possible we've seen the highs. Obviously, there's a possibility that this could just develop itself into a decent running flat, which means we'll get that other leg up we were looking for, back up to the highs around about 48, but be very cautious with that trade. Ross Stores, you can see another one, back to its February highs, but with a kind of structure that's pointing towards a 40% decline, back to the lows, 134 down towards 57. So another big drop. Spirit Airlines, similar one. I'm looking at Spirit Airlines a little bit differently than the other airlines. Big impulse off the lows, and I'm going to stick with that being an actual impulse, saying that what we had was a double bottom, and this is your impulse off the lows. Meaning what we had here was a choppy A wave down, a fairly choppy B wave up, which kept us pretty much confused for a long time until we started to see a little bit of clarity. And I'm starting to look at this as an ABC corrective structure. As you can see, when you zoom in and kind of adjust the candles, that makes a little bit more sense. But what that does mean is we have quite a big decline on its way from around about 25 down towards 11. So again, 40%. Starbucks, another one. Weekly chart. See a pretty big decline from, this one's from August 19 down towards the lows in March. Pretty nice price action all the way back up to the highs, bit of a contracting flat in the middle. And what to expect, or what we can expect moving forward, is a fairly big drop from 102 back down towards the 60 region. Again, can't say we've topped out just yet, but definitely keeping a close eye on price action. And when you go into the lower time frames, take a look at the lower structures. What you're seeing is impulse, correction, impulse that's sitting right on the minimums. Obviously, potential for a little bit more upside, but cautiously looking at what could be the highs. When we go to lower time frames, again, just starting to see what looks a little bit like a topping pattern. So keeping a close eye on that. Twitter, I think Twitter's already topped out. I think this latest decline is a move to the downside, just looking at the structure. Impulse, very nice, well laid out, expanding triangle, expanding flat or regular flat, depending how you want to look at it. And look where we topped out, right at that 1-to-1 region. Zooming in, you can see that doesn't look very corrective to me. That looks like a pretty much straight line down, especially with all the talk of banning accounts and whatever. That's not good for business in my view. And again, lower degree structure, perfect touch off and a fall to the downside. Going into the hourlies, you can see fairly decent topping pattern that I've been saying in a lot of these other pairs. Doesn't look a lot like a head and shoulders because it does have a higher right shoulder than what you would consider to be the head. But in our parlance or in our price structure analysis, that would be your first impulse down. This is your first corrective structure, ABC, and then this is a continuation of that move. And just keep an eye on Facebook to do the same thing, and those other tech stocks that I mentioned earlier. Visa, this is the one I was telling you about. As you can see, very similar to MasterCard, just a bit cleaner. Impulse down, impulse up. Perfect little B wave structure. If we take a look at where we're sitting on the structure, we're sitting right on those minimums. So again, quite a strong move off the minimums, but this could develop into a bit of a running flat, give you one leg higher, and then we see a turn to the downside. If we take a look at the structure, this is looking more like a bit of a running flat for more upside. So in the meantime, you could maybe hedge your bets to the upside if you are going to start taking some shorts. And Visa would maybe be kind of a higher risk long to the upside. But again, looks like a little bit of a topping pattern, so just be cautious on this one. Verizon, zoomed out. Again, these older stocks, when we go all the way out, we can see a very clean picture that is indicating a very, very ugly drop to come. Big impulse to the downside, choppy move back up to the highs, and what to expect moving forward is something similar to this kind of 2008 decline, which has linked itself into one big A wave. So something like Verizon, you might see quite a quick drop given the structure of the A wave. In terms of the B wave, it's not the best B wave ever, but I'm looking at that as more of a triangle than anything else. It makes sense as a triangle. And if we look at the chart in terms of levels, we're not quite there. Depending where you see the lows, the triangle makes it a little bit confusing, but we are fairly close to those minimum levels. So again, cause for concern, and again, seeing a little bit of a topping pattern here. Although Verizon does look like it wants to go a little bit higher in the short term, but we have to give it the benefit of the doubt, but be very cautious trading that. And finally, ExxonMobil, another one which we've done well on the long side, but my students know what we're looking at on the long side is a C wave to the upside. And what that means is following a C wave comes a decline. So as bullish as we were energy heading into the end of last year, we're starting to be cautiously bearish. I think we still have some more upside to come. I'd like to see these highs broken at 55, and then we can see a turn to the downside and see this big bearish move that we've been stating across all of these pairs. That shows we're heading into the real bear market. I think people are complacent. I think they just think stimulus is going to affect all, and we might see a kind of buy the rumor, sell the fact type dip once that stimulus package is announced. I don't really know the fundamentals of what's going to drive this, but the charts are really clear in terms of what we can expect over the next few weeks and months. So yeah, be cautious, look after yourselves, look after your money more importantly, and it's definitely, in my view, a time to be defensive. It's cool, guys. Keep an eye out on Twitter for updates, and obviously if you're in the academy, your updates will be much more regular and much more detailed. So yeah, keep an eye out in the investors corner or traders corner for some more updates. Cool, guys. Have a great one. Have a great year ahead, and we'll chat again soon.